Happy Friday, Eric Bible with the Bible team at Neil Home Loans. And yes, inflation still matters. It matters a lot. As unfortunately this morning we kick off the pricing on the 30-year fix up from last week 6.96 to 7.37. The question becomes, well, why? What happened? And why inflation? We'll get into that here in a second. But also today I want to cover on one silver lining, what this opportunity can present in market right now. But two, NAR. We know we're still talking about it. Our clients are still talking about it. And I believe we put together some incredibly useful tools for you to help get in front of this with your client. No different than what we face in our market and our industry with what's your rate conversation and being able to articulate value quickly versus what's your commission conversation. So more to come on that. But first and foremost, we need to understand what the heck happened this week. As we knew, as the new year kicked off, we looked at January, February, March, the inflationary reports. Yes, they showed some heat up, and the word that was dubbed from this was seasonal. It was seasonally influenced by what was occurring during the season, holidays, people spending more, people out shopping. So it was expected to pass. Well, we fast forward to Wednesday, March report, which now we're out of the seasonality aspect of reporting, actually showed inflation continued to be more sticky, more persistent than previously understood. And with that, there was a tremendous amount of anxiety walking into this report because of this outcome. And why? Because the Fed is, said if there is, potential for bumps in the road with inflation, we may have to revisit our monetary policy. While simultaneously, the labor market's been strong. Unemployment yet again fell. Now we see inflation rising. A lot of concern comes into play of, hey, what's going to happen with the first rate cut? At first, we're going to see 6 rate cuts this year. Then it went down to 3, first in June. Now with Wednesday's report, we're potentially seeing the first cut now pushed out to September. So yes, there's a lot of dissecting, understanding, information still to come from these reports. But this week proved to be inflation mattered, and we saw ultimately bonds suffer because of it. In turn, the interest rate we're looking at here. So really it came from not only core really moving higher on a year over year basis, but also the headline number remaining flat, which obviously is a move in the wrong direction. And ultimately the markets took notice of that. And we saw mortgage pricing deteriorate really at a rapid rate. And now the question becomes of, well, what's the opportunity in this? As we've been reporting over the last few weeks, the market's been heating up. Buyers are in full force. Inventory is still incredibly low. I've heard an encountered situation where it's not just 1, 2, 5, 10, but 30 plus offers on homes. Buyers are feeling the same pressure they felt in 2020, 2021, yet with higher interest rates. So in this moment where rates climb, could present a unique opportunity to the buyers that are able and willing to push through and secure property now. So we've been successful with rates having an 8 in front of it. It's no different with rates in 7. This is the historical buying and selling season. Let's not allow it to dampen the activity and the movement that we've experienced over the last few months. With that, what does this mean now for the Fed? Obviously, yes, there is still a lot to be determined as to how the Fed will respond to this. We've had some talking members come out this week that said, yes, inflation is still persistent. Their focus remains still very much on the labor market. So it's something we will continue to monitor and we will continue to bring as new information becomes available. But as we know from this cycle, the ultimate sayer is the Fed. Yes, we have to interpret and understand the data in live time, but the narrative continues to remain that housing is still incredibly strong. The buyer's appetite is still there. Inventory is still incredibly low and activity is insane. So really, this could be a true blessing in disguise to help kind of pump the brakes on a lot of the auxiliary buyers out there and hone in for those buyers that have missed on those previous windows. Another thing I really want to hammer down here is the articulation of value. As we know, the NAR settlement is still hung up in the courts. Ultimately, the judge still needs to review, and we anticipate it taking legs as early as July of this year. A lot of our partners are already finding ways to get in front of this with their consumer base. How can they articulate their value? How can they advise and guide their buyers to ensure they understand the value behind a buyer's agent? And I look at it as no different than what is your rate conversation, something that the mortgage industry has grappled with really since the beginning of time. And the ones that are able to articulate value quickly and understand the value behind the services you provide are the ones that command the greatest space. With at Neo, with collaboration of some of the nation's top agents, we've put together some incredibly useful scripts, very similar to what we've been very successful with within the mortgage space, but for the real estate space. We see so much value in being able to tackle this concept head on. And I want to give them to you. If you want access to these scripts, shoot me a message, shoot me a text, call, email, whatever, smoke signal, doesn't matter. We want to empower you to be able to communicate your value to your client base. The industry is changing. The ones that don't adapt and lean into that change are the ones that get left behind. Don't be that person. We're here to help. We're here to support and would love the opportunity to connect. As always, make it a fantastic Friday and an even greater weekend. Thank you.